I want to get into an issue that has been front and center today. The first thing is the drivers. Are they the cause of the supply chain problems? Well, it depends who you ask. The second is commodities getting high. That's right. I will show you one in particular that I had talked about not too long ago, suggesting the demand is clearly there and the prices, of course, have gone up. The third is the Fed taper. It was expected that the Federal Reserve would begin their bond buying taper at their November meeting, and spoiler alert, they did. I'm going to show you what they did do and what they didn't do. All of that and more. Let's begin. I have several articles here. This one happens to be out of the Wall Street Journal. I'll show you freight waves as well, talking about this driver issue, but I will get into depth with it. Where are all the truck drivers? Shortage adds to delivery delays. The trucking industry has long turned to drivers, and currently the situation has gotten worse. Now, many people have said this is not the case. There is no shortage. There's a restriction on the drivers. There's a restriction on the trucks. There are all different things. And I don't believe that it is one singular issue. I think there's more going on here. Let's get into this first and hold your thoughts for a moment. Taking a look here, truck drivers right here sitting and never gets loaded. This is a problem. You've got people that are sitting in these trucks waiting for their opportunity to get loaded, to move the cargo, and repeat the process. I think it was this particular article, or perhaps the next one, where they basically say that previously they were doing 3 to 4 trips per day back and forth, and now they're lucky to get 1. So there's a bottleneck before the driver even has a problem. And one of the issues they mentioned was, if I got these guys sitting there all day twiddling their thumbs, well, I don't need to have as many as I did before. So suddenly there isn't the demand, but at the same time, we're being told there is an extremely high demand. So there is a lot of confusing information today, there is no doubt. Trucks haul more than 70% of domestic cargo shipments, yet many fleets say that they can't hire enough drivers to meet the booming consumer demand as the US economy emerges. The freight backup has intensified long-standing strains in the industry over hours, pay, working conditions, and retention. I think it's important to note what they discuss here in the next paragraph and unpack it a little bit. The surge of goods has created log jams at loading docks and port terminals, gobbling up scarce trucking capacity and making drivers' jobs even harder. Factories and warehouses are also short of staff and load and receive those goods. Now, for me personally, just having a shipment going from California, one of those was going into one was Kansas City, one was another location, and it did take a little bit longer. But let me just tell you, it was maybe 2 days longer, maybe 1 day longer, but that is, of course, of limited scope. I'm not one of the big boys, right? But I just noticed what we're seeing here is so many different levels all at once. The drivers, in a sense, they need a lot of them. They need to move a lot of cargo. But if they're just going to wait in a lineup, then what exactly is the point? There are other bottlenecks. The lack of drivers hamstringing supply chain recovery. Drug clearinghouse, retirements, infrastructure are among the factors affecting drivers' availability. So they do talk about this right here. You could see all of the different statistics that go in line with that. All drivers, prohibited status, and so on. And even shows you a chart talking about testing positive for particular drugs. And they're saying, look, we're not going to let these people on the road if they're testing positive, and so it goes. Truckers are tired of taking the blame for congestion crisis at California ports. This is where we start to change the tune a little bit. California port truckers say there's not a driver shortage. Just look at the lines. And I have heard from some in the comments. And I'll stop here for a second to ask you, what do you think the problem is with the truckers, if any? Please Put it down in the comments below. Let's have this discussion. Looking at this, you could see that this particular individual surveyed his truck yard just outside of the Port of Oakland. He pointed to shipping containers filled with corn and soybean sent bound for impoverished nations in Africa and elsewhere around the globe. He said that they have to try and get this material out to people. It's not able to do so. The appointment times could be scarce. Determined operators push towards automation, and other trucking company owners are saying that it isn't always reliable, the automation side of things. This requires drivers to keep checking for appointment times day and night and on weekends to see if more time slots open up. I have customers calling me daily, telling me to name my price, but it's not that simple. So they get into a few things here. You could see the driver shortage being one of them. I'll just read through this really quickly. Automation isn't always the answer. There are 4, I believe. Equipment shortages and containers dumped at the wrong ports, adding to frustration. There are many things that are happening today. It isn't so linear. 58,900 long-dwelling containers now on penalty clock in LA and Long Beach. This is interesting. I don't think it's going to do anything because unless those fines go up considerably, but certainly they'll be able to make some more revenue. Shipping shares in a sea of red as broader stock market rises. Dry bulk stocks lead ocean shipping equity declines. This is funny because you would think in a sense there's that high demand, but at the same time, if they're not able to move that product, they've got problems. Now this is in truly some serious depth. I was only able to scratch the surface. Let's talk about it a little bit here in the Money GPS Insights. Still to this day, the markets are anticipating that inflation is going to be transitory. The problems, transitory. The supply chain, oh, don't worry, it's all temporary or transitory. And even the Federal Reserve had to clarify their usage of the word transitory to kind of make it all go away. Those who are paying attention know that inflation is never a temporary scenario. If inflation is in fact here to stay, if that's what you believe, then you must make adjustments to your portfolio. You cannot be complacent at this time. I talked about this in the Money GPS trifecta method of investing, which is available on the playlists on my channel. You just scroll down, you will see it. But fertilizer is very important. A top fertilizer firm says its greatest challenge is fulfilling demand. Strong crop prices are behind bigger farming spending. Fertilizer costs have soared amid European energy crunch. You can see it for yourself and hear the details. I've covered it so many times before. Persistently low inventories and capacity constraints are underpinning the tight supply-demand balance. Yes, GPS, I got it. Don't worry, okay? This is important though, because I told you, look, agriculture, supply chain, inflation, it's all here. So we've got farmland, we've got fertilizer, we've got crops, we've got seeds, and we've got the equipment needed to make that all happen. These are all different components of this one issue. Now you can invest in it in one way or another. Some people might just buy John Deere. Okay, I'm going to buy John Deere. But if you really want to be properly invested, you need that diversification even within one strategy. This is why I call this the Money GPS trifecta method of investing. I think you should check that out. It's a really short video. Looking at this, uranium stocks, ETFs. So that breaks it down, URA, CCG, UEC, and so on. And what we are looking at here is a general trend up. This goes over the last year and just shows us, yes, there have been ebbs and flows, but certainly the demand is there. This is one I've been talking about for a little while, showing you how much interest there is in these uranium products, whether that's the physical Sprott ETF, whether it's the companies. Ultimately, you are seeing the demand there, and as a result, the stocks have done well. Oreo cookies, Ritz crackers, and Sour Patch Kids will cost more next year. Yes, that's right, 7% increase. But wait a minute, food prices are only up, what do they tell you now, 3% or whatever? It never adds up. But of course, I'm not sure that these things constitute food, but that's a different story. All my friends out there who love your Oreo cookies, each dunk is going to cost you more money. That's the end result. China's economy faces new downward pressure, according to the premier himself. Do you usually see that? No, something has really changed in China over the last little while. I have been putting a lot of attention and focus on my videos on what's happening in China because I believe something is being set up. I can't necessarily speculate, but many have said it in the comments, and, I tend to agree. I'll leave it at that. If you do think that something big is going on in China today, hit that thumbs up button. Appreciate what I'm doing here. Support the channel as well by hitting that thumbs up button. If you don't agree with me, hit the thumbs down button. All right, take a look. China's climate goals hinge on a $440 billion nuclear buildout. China is actually planning on at least 150 new reactors in the next 15 years, more than the rest of the world has built in the past 35 years. So what we can see here, no matter what, you could take what you want from it and so on. No matter what, we are seeing the demand for uranium. Do you see what's happening here? Whether you think it's good, whether you think it's bad, this is where the money is going. We are putting more money, governments are putting more money into uranium one way, shape, or form. Green energy as well. You are going to see solar panel and wind and all these different things, which you might say, hey, it's not good, but that's not what the government cares about. They are doing what they believe is the right thing to do. And as a result, money is being poured into it. Stocks will rise. Certain businesses will rise. Others will fall. This is just showing you right now. Over the years, US, France, and so on, there has been less attention to it, but China wants to increase the amount of expenditure on this. Now, Federal Reserve, you probably saw the FOMC statement already. Yes, in fact, they are reducing the amount of money that they print every month. I specifically highlighted that they would reduce it by $15 billion per month. And in fact, yes, that was the case. Number one, we saw many of the big banks talking about this. I brought that to you. It was a speculation, but that's what they said. And then, of course, we had the FOMC meeting minutes, which dictated that as well. They left the interest rates as expected at the current zero bound, and who knows where that will be. Fed dials back on purchases, plots the end to stimulus by June. So that's where they believe that that will happen, the reduction in the money printing down to zero by June of 2022. We'll see what happens. The market had basically priced it in. The market didn't like it, of course, but we are right now just showing the whole world essentially what it looks like to reduce the purchases after keeping it for so long. This is going to take a little while, but I think that the markets are too addicted to this injection of monetary stimulus to allow it to happen without a bump in the road. That's all. I'm going to end it there. If you found the video informative, hit that thumbs up button. I want to thank you for that. If you haven't seen this video, you definitely got to check it out. Click it, and I'll see you there.